isn't it funny how the how wide ranging the like how we each define speculation is? Like when you say speculation, people are thinking like Bitcoin. I saw we had a comment like AMC short squeeze, or piling into GameStop just purely because the price is going up. And here's Frank, and I would largely have the same answer, that I would define speculation, when I have to invest in a company that maybe has to grow 15% a year to get a good return, and it's done 18% in the past, and I don't know if it quite can sustain this growth rate and that sort of stuff. It's interesting.
Maybe the word for it is just uncertainty. It's investing with high uncertainty, and to counteract that high uncertainty, you'd want something that has high risk, high return asymmetry. Like if it does pay off, you'd want it to be high. At least that's how I would look at it. And uncertainty seems to be the common denominator for all of us. In that maybe it's not based on fundamentals, or they just really need to produce. And there's more risk because they have to hit those growth projections or something like that. But uncertainty seems to be kind of the thread in all of this.
Yeah, I think. You go, Brad. You're probably going to say the same thing I was about to say.
So I think you could have a very uncertain investment and it still have a high margin of safety. Because the uncertainty is already built into the price. So it's, I like what Howard Marks says in terms of, he's going into these junk bonds, right? That's kind of how he started his career. And he was shopping there because the market didn't really understand that you can have these things that seem really high risk, like very low rated bonds. But if the price is low enough, they can be very safe investments. So that's kind of how I see it.
I guess an example of a company that I'm looking at right now that involves a lot of speculation as part of the investment is I'm looking at Blackstone Minerals, which is a mineral rights company in the US. I posted a video about this recently. Karan and I were talking about it as well. But a lot of it, I guess, would be on the safer side. Like they have essentially these assets or these mineral rights that really you're going to get your capital paid back over time through dividends, almost guaranteed, even if they stopped pulling oil out of the ground right now or stopped leasing out any more land. But to do well in the investment, I'm speculating that the oil prices and the natural gas prices will be higher in the future. So that, in a sense, is complete speculation because I really don't know. So I can try and be conservative, and in some of the assumptions I make, I take very low historical averages of both natural gas and oil to value the company. But for the investment to do well, I would need that to be higher than average. So that complete speculation if I did make that bet.
So it sounds like what you're saying, the upside is a bit speculative, but you feel that your downside is protected. Am I getting that right?
Yeah, downside completely protected, but the upside could be very, very low. But if everything plays out well, maybe it could be some type of inflation hedge, prices go right up. It could turn up with a huge upside as well.
I think you brought up a very relevant issue with speculation in talking about like commodity prices. I think the more macro related the investment gets, inherently the more speculative it is, because there's so many things that affect like macroeconomics, macro whatever, large economic movements, that it's very hard to predict them in the short term, and even to the medium and long term, very hard to predict those. Probably a lot more than, say, looking at how a business is operating. You can make very concrete changes that are probably going to have a high chance of fixing it or improving returns or something like that. Whereas with something like any sort of commodity-based company, it does ultimately rely on commodity prices, and so much goes into that is inherently speculative.
Mm-hmm. Yeah, I would argue that investment you just described, Frank, is not speculative. That like if your downside's covered and it's the upside that you don't know, I don't think that's speculation. Like I just quickly looked up the old Ben Graham quote of defining an investment, and he said, an investment operation is one which, upon thorough analysis, promises safety of principal and a satisfactory return. Operations not meeting these requirements are speculative. So I would say if the downside's covered, then it promises safety of principal, and that kind of takes care of the upside. So therefore, it's not speculative. But interested to hear the rest of the group's thoughts on that.
Yeah, even if you go for the low cost producer, that makes a big difference. So especially like with Blackstone, they've got like a separate deal with the rights. So I don't see it as speculative.
Yeah, I guess the overall investment is not speculative, which is why I'm probably interested in the company anyway. But that one aspect for it to do very well, relying on a commodity price, which I guess is speculating. So part of your valuation, you have to speculate slightly, but you are right. If the downside's protected, which I believe it is, I've still got to do more research before I'm convinced on that, then yeah, it's, I guess, the opposite.